2025 blindsided multifamily. Not because demand fell, but because supply finally hit its peak, and the entire year unfolded from that single pressure point. 2025 looked calm on the surface. Vacancy hovered near 4.4%, rent growth flattened, and most markets held their footing. But underneath, something much bigger was happening. For the first time in a decade, the sector wasn't struggling to create demand. It was struggling to absorb the largest delivery wave in modern multifamily history. Nearly 92,000 units delivered in a single quarter. Absorption dropped more than 70% year over year because tenants didn't disappear. The market was simply overwhelmed. Yet vacancy didn't blow out. It drifted, steady, contained, a signal that the demand engine was still alive, even if it was buried under new supply. Investors saw the same thing. Even with financing costs squeezing every deal, the market still recorded $108 billion in volume through Q3. Cap rates shifted into the low fives, not because confidence evaporated, but because capital finally repriced risk with discipline. Well-capitalized buyers stayed active. Lenders got selective. And development capital, almost quietly, shut off the tap. By mid-year, new starts fell over 70% from the cycle peak, setting the stage for the next chapter. Meanwhile, the map split in two. States like Florida banned rent control entirely. California tightened it. Some cities opened zoning for multifamily on commercial land. Others added layers of tenant protections. Capital followed the path of least resistance. 2025 wasn't a weak year. It was a reset, a return to fundamentals after years of artificially elevated momentum. Here's the real shift. Multifamily stopped being a demand story and became a supply story. The sector didn't break, it digested. And digestion always looks quieter than growth. 2026 enters with a completely different equation. Starts are down 74% from the peak, which means the pipeline finally clears. Vacancy begins to retreat toward the high 4% range. Rent growth, stuck near zero for most of 2025, rebounds toward 3+% nationally as supply thins out. Demand doesn't need to recover, it never left. High for sale housing costs, widening rent versus buy gaps, and a solid job market keep renters in place. Financing stays tight, equity stays disciplined. But feasibility begins to stabilize because operators finally get something they haven't had in 3 years: breathing room. 2026 won't be a boom. It will be a return to balance, where clean operations and real underwriting win again. 2026 rewards operators who don't confuse relief with recovery. Multifamily's cycle didn't end in 2025. It restarted.